Welcome back, Alpha Hunters. I came back home this week on Tuesday, so I am back home myself. So welcome back to me, I guess, of sorts, but that's not really a big deal. Let's talk about what went on this week. And this market outlook is going to be a little bit longer. I'm going to try and keep it moving pretty quickly because there's a few things that we're going to kind of look at, just kind of, a little bit more of the longer term stuff than what I've looked at really over the past couple months. I haven't really kind of looked at this stuff, especially over the past month since I've been gone, and kind of where we're going from here. I know there's a lot of questions kind of around that, so we can kind of figure out. But if you are somebody that looks at the stock market at the end of every day, just kind of see what the day did, if we were up, we were down, how much we were up, how much we were down, whatever. You might think Friday was the busiest day, right? With it being down roughly 2.3%. Well, what you can see here is Thursday was hugely busy. Okay. We had a very nice gap down on Thursday, and then we just saw extreme amount of buying come in. So let's just go ahead and get into talking about what went on this week and really try to understand what the market's doing so that we can kind of get going into the near term, at least. Okay. Not much was kind of going on this week up until Thursday morning. Okay. Monday had a little bit of a gap up, kind of just chopped around a little bit. Tuesday gap down, but traded higher. It was just kind of a choppy session. I was actually driving home this day, so I missed most of the action on that day. Wednesday was extremely flat. Look how flat that was. I mean, it was just sideways the whole day. Not much was going on, and kind of a little breakdown towards the end of the day. Thursday was the day, right? We got CPI numbers that came out Thursday morning, and they came in. Headline inflation came in at 8.2%, and the expected was 8.1%. And the core inflation came in at 6.6%, with the expected being 6.5%. So it was kind of interesting to really see, because 8.2%, if you were in the live stream, that was kind of the no man's land. I didn't know kind of what the market was going to do. I was kind of preparing on Wednesday, if we were at 8.3% on the CPI numbers or higher, I figured we would gap down. And on that gap down, we would see very strong buying on Thursday. I didn't really have any kind of doubts in that too much. But I did kind of think if CPI came in at 8.1% or lower, we might have actually gapped up. But that was not the case. It got 8.2%, market gap down, traded higher. Extremely bullish. Yeah, there's not really much else to say. I mean, other than just look at that action. We went from 2% down, roughly about 2.5% down, 2.4% down, to trading to about 3% up on the day. Wound up closing up on the day roughly 2.6%. So a little bit over a 5% full swing on the day. From lows to highs, and it was a day. That mid-morning time period was extremely bullish. It was even more bullish than I thought we were going to see on the day, but I think this caught a lot of people off guard. I kind of figured we'd be bullish, but not as bullish as we saw. So very interesting to see that. And then we went into Friday. Kind of figured after very strong bullish activity that we saw Thursday, we see a little bit of a higher high. Well, we gapped up, saw a little bit of a higher high, and then sold off. And then we really just continued to sell down the rest of the day. When I was on the live stream in the afternoon, it was right here around this time when we were kind of breaking down, making new daily lows. I kind of thought we'd have a little bit of a push higher into the close, maybe close over the 360 to 361 area. But it really didn't. It tried to do that a couple times in that last hour, and neither time kind of could maintain that push higher and just wound up breaking down, just kind of closing roughly at the lows of the session. Which was really kind of interesting to see that, but it doesn't really matter. It's in the books. Let's figure out where we're going. Okay. So with Thursday's price action, I do think this was probably the bottom of the bearish trend that we've been in since August 16th, right? For about 2 months, we've just kind of been selling down. Thursday, I do think that was probably the near-term bottom for now. I think we'll probably be choppy, probably trend into a bullish direction over the next few weeks. Here in about 2.5 weeks, on November 2nd, we are going to get Fed talk. Okay, we're going to get the Fed interest rate decision, and then Jerome Powell's press conference after that. So we will see kind of what happens over the next few weeks. But I do think we're going to go into earnings with continued financial earnings early this next week. And I do think earnings are going to be okay. They're not going to be horrible. I think they're going to kind of lift the market a little bit, give it a little bit of optimism, hold the market up. We'll see a little bit of bullishness, but I think it's going to be choppy. I don't think it's going to be anything trending like we saw in July, August, early August type time frame. I think it'll be more choppy as we kind of just bounce around, potentially make it up to the 390 area. This is where I would really like to be bearish, is around the 390 area. And we'll get in a little bit of that a little bit later on in the video. But for now, I do think we'll probably just be choppy in the upper direction. Okay, not extremely bullish, probably just more choppy than anything. I think it's gonna be a good time to just kind of sit in your hands and game plan for what you want to see, and just kind of see what is moving in the market and what is not. Okay, so for the Qs, same kind of deal, except it's been a little bit more extremely selling, especially recently. We've seen a tech get really hammered recently, especially with this recent lows. So I'm not going to think that they're going to trade any differently than the SPY. I would expect them to kind of be choppy to bullish here over the next couple of weeks, and we'll kind of see how things set up. I have a little bit better idea of where I think the SPY would get to. I'm not really sure on the Qs. Maybe to this 290 area to 295, possibly, maybe 300. Somewhere like in that like 294 right here at this bottom that we had in early September, and kind of the top of this consolidation pattern that we had in June and July. So it's kind of tough, and I might put some markers out here maybe next week. I don't think there's any hurry to kind of put markers out there, but yeah, I don't know. I have a little bit better grasp and feel on the SPY right now. Let's take a look at the AAPL. Okay, AAPL. Very nice, has been trading down in this channel and then got deviated to the bearish side, kind of broke down below this channel a couple of weeks ago. This is kind of when I closed my bearish position on AAPL, and then obviously the huge amount of buying that it kind of came in with Thursday morning. And actually, let me go intraday on the AAPL. What was interesting about AAPL on Thursday was this thing wasn't really performing yet, and then we got to the 11 o'clock Eastern time frame, and there must have been some kind of buying button switch on the market, because 11 o'clock Eastern, AAPL just popped. Everything popped. AAPL definitely was the one that was really lagging a lot, and this thing just took off, and you just saw buying everywhere. Like it was just a button was just flipped. And you definitely just saw it. I noticed it a lot more on AAPL because it was lagging in that first hour and a half. But man, after that 11 o'clock Eastern time frame, it just took off. But you saw pretty good selling come back in on AAPL again today, closing down roughly 3% or a little bit over 3%. So yeah, it is definitely things are moving pretty good. Intel though, I've definitely been watching some Intel. Intel having this huge breakdown to this. This line is a long-term support level, and it just kind of made sense to try to be a little bit bullish on this down here. Just trying to take a shot a little bit. I'm not trying to be too aggressive, but it just was one thing that I was kind of noticing here recently, especially the past few trading sessions, is it really kind of stopped breaking down. You saw a little bit more buying on the daily time frame coming in over this past week than what we've seen on some other stocks, especially the stock market. We've seen several red candles for before Thursday. The previous 5 sessions were all red, but Intel, even before Thursday, there was 2 days, Tuesday and Wednesday, that they were both green. So it's just kind of interesting to see some of this kind of going on. A lot of things are moving in different directions, or starting to move in different directions. So let's go ahead and take a look at the dollar and see what's kind of going on with the dollar. And Thursday, when we got the CPI numbers, the dollar after the stock market opened, got crushed off. The dollar kind of dropped quite a bit. You see Friday, the dollar bouncing back. I don't think this is going to hold. I am thinking Monday and Tuesday, we're probably going to see a little bit more bullishness on the market, on the stock market. So I think we'll probably see the dollar and rates, looking at here at the 10-year yield. Look at these rates, man. They look like they're primed to just keep going higher. It's kind of tough for me to say. Like, I think we'll probably see a little bit more of a pullback, kind of break back down, because it doesn't really look like that too much. The dollar looks like it could do that, but the 10-year yield doesn't really look like it could do that. 10-year yield looks like it could probably keep going higher. And actually, if we look at the 2-year yield, the 2-year yield looks really good as far as its potential just to keep climbing in the bullish direction. Yeah, it's one of those things that, like, a lot of things are, not like extended, but primed for a little bit more of a pullback, I guess you could say. The GLD, obviously with dollar being up, GLD getting hit a little bit today, but we're seeing some pretty good bearishness kind of come back down on the gold, at least, especially with dollar kind of rising still over the week. And the HYG. The HYG saw a really good buying action yesterday, as well as, just like the stock market, but they actually did pretty good today. Even though you see, pretty good selling candle coming in, it didn't have as much of a bearish day as the market did. They were only down 0.32% on the day. So maybe not the all bearish signal that the market's kind of shown us on some of the other things. And the HYG has been leading the stock market, typically in whichever direction's been going. So I kind of am thinking that we'll probably see a little bit more of a bullish activity on the stock market, maybe see a little bit more of a pullback on the dollar and rates here as we go into the next few weeks, or at least until we get to Fed in early November. Okay. So one of the things that, if you guys know, that I've been doing for several months now, and I'm going to zoom out here, just kind of show the full year-to-date picture in here. So one of the things that I've been doing is kind of keeping track and comparing kind of how our market, or this bear market, has been performing compared to the financial crash bear market and the tech bust. Okay. And what's kind of interesting is to kind of see how things line up. Do they kind of keep pace? Do they make the same kind of bearish and bullish moves, bullish retracements? Do they break below the previous bearish low, that kind of stuff? So we're going to take a look at this file, and I've kind of gone ahead and updated it this week on the live stream. So we'll just kind of take a look at some things here, kind of some of the things that we were looking at Friday on the live stream. But one of the things that I went ahead and did is this week, we went ahead and updated this 348.11 number, because that was the low. That was the actual low that we hit Thursday morning. And what was interesting is I actually had a basically just a filler number in there at 350, because that was what the metrics kind of fit into as far as telling me where we would get to. So the fact that we were really close using this kind of lets me know it's it's a little bit of confidence booster into tracking some of the bear market bullish and bearish moves. So this is kind of the thing that we're going to look at here for next few minutes and see what value we can kind of take out of this. Okay, so I'm going to highlight some numbers, and then we'll kind of see and compare different over the two previous bear markets and our current bear market. Okay, so I went ahead and highlighted some green columns here, and I didn't take it all the way down through the data, but I just wanted to show you in the first part of this bear market that we've in, kind of like what we're on pace for, what we're on track for. And when we look at the tech bust, right, our first move down, we went down 14%. During the financial crash, we went down roughly 10.7%. And our first move down in this bear market, we went down roughly 0.5%. Okay, so I'd say we're roughly in line with the financial crash and the tech bust, probably a little bit more in line with the tech bust. And then the second move, I went ahead and highlighted another column. This percent from all-time high, that's what this is, percent from all-time high column. I actually highlighted this one again. So the second bearish move down, we wound up getting 16.5% from the all-time high. The financial crash wound up getting 20% technically into a bear market from all-time high, and then 24.5% in our current bear market. So you can kind of see where we started, where we've every leg down, this bear market's been outpacing the two previous bear markets. So it's just kind of an interesting note. And then this third move down, kind of how that corresponds with the previous previous two bear markets is the tech bust. We got down 19.4%. The financial crash wound up getting down 23.8%. This bear market wound up getting down 27.5%. So it's just kind of interesting to see kind of how much of a pace that we've been having to the bearish side already in this bear market. Okay, so as we kind of look at different things, the other thing we kind of want to look at is this break below the previous low and how much of a low we make back to the bearish side. This low that we just put in, roughly 4% lower than the previous low that we had. So basically this 348.11 number is roughly 4% lower than the 362.17 that we put in at June. So just kind of interesting to see that. And, you know, the break below at this point in time in the financial crash was roughly 4.75% below the previous low. And back in the tech bust, roughly 3.5% below the previous low. So, you know, we're still fitting relatively good in some of these metrics and where we are on the stock market. Okay. I would say we're just a little bit ahead of, you know, the pacing to the downside, but maybe that's telling us we're closer to the end already, or maybe we're setting up for a much larger drop later on. Because typically now, once we get past those spots, the moves in the bearish direction, let me highlight something for you. So you can see here that these next bearish moves, they're much more extreme to the bearish side. You know, we saw roughly a 14% breakdown below the previous low on this move here on the tech bust. And then this was the big whopper in the financial crash. We went down an extra 38% below the previous low, where we actually went down from 120 to 74 in the financial crash. So yeah, very interesting to see kind of where we are in our current place in, you know, kind of, you know, that bear market and what we can expect kind of going forward. So I do expect anytime, you know, we get to the next bear market selling, that will probably be the biggest move of this bear market. And then we'll probably be mostly done at that point in time. So just be curious to see how much of a bear market sell-off we do have in the next one. But we're not quite there yet. Let's just go ahead and look possibly where we are now, which I think we're going to go into a nice little bullish move here. Not extremely crazy. I think it'll be more choppy and ugly than anything else. So let's just take a look here at this period of time in both of the tech bust and the financial crash, and then kind of where we are now. I believe where we are now in this kind of bear market. We're going to get a nice little bullish retracement here. I don't think it'll be anything too crazy. Maybe a 50% retracement where we get back up to the 390 level. And if we do that, maybe about a 0.5% per day, right? Based on if we get there by November 15th, you know, that's roughly in line. If you're looking at a 50% retracement, you know, we had roughly a 47% retracement of the previous bearish move. And then back in the tech bust, we had roughly a 70% retracement at off of that previous bearish move. Okay, so what I'm talking about, the bearish move, is when we go from the high that we set in on a little bullish run down to the bearish move, and then how much higher we go on this little bullish run, how much into that bearish move do we eat into, okay? So this one ate about 70% of it. This one ate about 48% of that bearish move. And this one, you know, maybe looking to eat about 50% of it. You know, typically on average, this is the average of all of them, about 63%. So, you know, typically the later you go into bear markets, typically the bullish retracement is less than the early on bullish retracements. So that's why I'm kind of having this one a little bit lower. And you know what, if we wind up getting to 400, It doesn't mean that, we're out of the woods. I mean, that's still going to be within kind of certain metrics and tolerances. So it's definitely something to kind of keep in mind that if we get to that mid-November, end of November, and we're still in that 390 to 400 area, or maybe that's kind of where we topped out, I'd be a little bit cautious. And that's probably where I'm going to be looking to pick up bearish positions. Okay. So let's just take a look on how this looked at the charts. Okay. So that first bearish move, from the beginning of the year down to this morning that we had on, or this little gap down that we had on the morning of February 24th. So this was the invasion of Ukraine from Russia. That's what morning that was. And then we had a nice little bullish run into the end of March. So about a 1 month little bullish run. And then we went on a bearish run from the end of March all the way down to the middle of June. And then, we went on a little bullish run from the middle of June to the middle of August, nice little 2 months. And then the one we basically kind of just ended was the one from mid-August down to roughly the mid-October low that I think we probably just put in on this past Thursday, the 13th. So that's kind of, to me, the pace that or the flow that I'm kind of tracking. You can break it down into much smaller levels, but on a weekly kind of time frame, this is the way I've kind of broken it down, especially when I've analyzed the previous bear markets. That's kind of why I did it the way I did it. I was looking for at least a 3-week move into what, or the move that I was looking for was, it had to be at least a 3-week move in that direction. So like this 2-week move here, I wouldn't have factored that. That's why I lumped it all into just one bearish move. So that is kind of one reason why I did it the way I did. But I want to go back and look at the financial crash and that period just before we had the huge sell-off, and see if we can kind of get an idea for what it feels like. Okay. So as you can see, this is it right here. It's this move. And as you can see, this is, if we just bottomed on Thursday this past week, that would be this low. That would be this low. And as you can see, it's not really too much of a huge rally that we get here. It's a few days up, and then it's mostly just choppy. It's just choppy, several weeks choppy, because this was a low on July, what is this, 15th? So it's roughly the middle of July, which, maybe the middle of October for us. And then, we kind of go into a period almost a month long where we get into the middle of August in '08. So from mid-July to the middle of August in '08, nice little bullish run there. And then we start to just slowly chop around, break down. And then once we start to break down, it really starts to accelerate after that point in time. But this is kind of something I think will be very similar to maybe this high corresponding to roughly where we are now, maybe the 390 or 400 type price level, and not whatever this is, like the 130 type price level. I think might be something that will be suiting for us in this time period. So yeah, I think we'll be a little bit more choppy in here, possibly over the next few weeks, doing something like this, maybe breaking higher, maybe making a run to 390 or something like that, and then kind of slowly chopping back down before we have like the real probably crash later on. I'm not gonna say crash, but it's just continuation of the bearish market. Okay. So what I think might happen is, we're just going to be choppy in here. We're just going to chop around. We'll get to the Fed in early November, and that just might push us up. Maybe they come out and say, yeah, things aren't horrible. And they're going to be lying. And then from there, maybe we just start to chop down and just grind down. I think later in November, December, probably be the time where we start to see some real bearishness, especially as we go into next year. But I think we're just going to be choppy in here. We're going to have earnings here for the next 2 weeks. We're going to have financial results and tech earnings here over this next week. And the second week will be, roughly tech earnings. And then the week after that's going to be the beginning of November. And that's when we're going to get, roughly the Fed week. And I would expect a lot of choppiness before that, sideways, not much market movement. before that Fed talk. Okay, I think that'll probably be the game plan. But yeah, I'm gonna be looking for that 390 level. That'll probably be the level. Makes a lot of sense to me. If we got there, I think that would be the prime spot to be bearish again on the market. But I think it's gonna be very difficult to be bullish as it's just gonna be more choppy than anything. But I think it'll be in a bullish direction. So it's not gonna be just a screaming bullish higher move on the market. Nothing like it was back in July or early August type time frame. Probably be more like the second half of June, first half of July type time frame, just choppy. So that's kind of what I'm thinking on the market. And I think we'll probably get to the 390, possibly 400. Doubtful. Probably get a little bit over 390 though, somewhere up in here, and probably be a good spot to be bearish. But let's just go ahead and take a quick look at what I think is the stock of the day. Let's look at Tesla. Let's look at Tesla. With the market and all of its absolute bullishness yesterday, the stock today was absolutely Tesla. Tesla was one, I really thought it would get down into the lows that we had back in the summer, early summer time frame back in May. And, it got below those lows a little bit on Thursday morning. Okay. Then all of a sudden Friday, people just came in and just sold this thing the whole day. We didn't really even see any good bouncing period. See a nice little pennant pattern right here in the bearish direction. Nice little flag pattern. And then it just broke that and just kept going down. And this thing breaking down below the low of Thursday is one I would keep an eye on. If you want to be bearish on something, this might be a really good opportunity. Now, I would definitely wait for its earnings to be over with this next week, as they did do a little preliminary heads up the first trading day of October, basically saying, I think production deliveries came in a little lower than expected. So that might be a little bit of the reason why there was some bearishness kind of coming in over the past couple of weeks and kind of pushing this thing down. But a lot of that information is already going to be baked in. People are already going to know that going into the earnings. So I'd be mindful of that before you try to get bearish right now, as we could definitely see an earnings pop, right? They usually do pop on earnings. So be mindful of that. But as this thing might set up here over the next few weeks, depending on what kind of price levels it kind of gets to or just consolidates at, might just let us set up a really good bearish type play on this. Anyways, I just wanted to call this out, as this thing did break down a major level of that low back in May of, what is that, roughly 206.86. So yeah, and if you look at this thing on a weekly, you can see it just lower highs, just continuing to make lower highs and lower lows, even continuing to make those lower lows this week. So makes sense. Probably definitely gets into this 193 area, 190 to 195 or so, where it had a nice little consolidation back in the early parts of 2021, and might find a nice little bouncing spot. And that's only 10 points away or so. So don't think that it might not get there early this next week, like Monday, Tuesday, and start to bounce before its earnings on Wednesday. So just kind of keep that in mind. I would expect a little bit more of a bounce, or at least want to see a little bit more of a bounce, over the next couple of weeks on TSLA before I would try to get bearish on it. But yeah, you gotta totally respect this candle that came in on Friday and fully engulfing, which was an extremely bullish candle on the entire market on Thursday. So just very interesting to see that. And that wasn't really the case when we were on the live stream on Friday, but I thought I would just call that out on the market outlook, as that does not look bullish at all. Okay. But as far as, kind of where we're going for now, I think it's just going to be choppy, bullish until we get to the Fed meeting, probably in early November, and probably just more volatility at that point in time, honestly. So that's kind of just what I'm thinking. Glad to be back. I want to just provide a little update on all the things I've kind of just been watching. Just haven't been able to get anything of value really like this out recently or the past few weeks. But yeah, I think it'll just be choppy to a little bit bullish going forward. Okay. So, Alpha Hunters, y'all take care and y'all have a great weekend. And I will talk to y'all manana.